In this video, we're going to teach you how to use the margin calculator. It's known as the Armor Risk Management System. It's available to you within your mystonex.com portal, but we're also going to provide you with a direct link to the tool. With this tool, you're going to be able to calculate what-if scenarios. So if you do have some open positions, they will upload into the calculator, and you can determine what the margin would be if you subtracted legs of your spread, if you subtracted positions entirely, if you added hedging positions, so on and so forth. It will also have the ability to start with a blank slate. So if you want to calculate what the option margin would be on a naked short call or short put or strangle or whatever the strategy you're trading, if you want to know what the margin is going to be before you place the trade, you can use this tool as well. Now, most of you watching this video are probably already clients of DeCarley Trading, and we appreciate your business and thank you. But if you found us because you are seeking information and guidance on how to use the Armor Risk Management and Margin Calculation tool, perhaps you should consider switching brokers to someone that will put a little more effort and detail into their craft. My name is Carly Garner. We are DeCarley Trading. We're a boutique futures and options brokerage. You can find us at DeCarleyTrading.com if you have any questions or if you're interested in trading with us. There's my email address and my phone number. As an aside, we do offer our clients, our brokerage clients, newsletters with market commentary and trading ideas. If you are interested in those, you can sign up for a free trial on our website. You can also consider subscribing to our Substack instead of opening a brokerage account with us. If you like your broker, even though he didn't make a video to help you with your Armor tool, if you still like him and you want to stick with him or her, you can do so and subscribe to our Substack and still get the information that you're looking for. So anyway, let's proceed. For anybody that's trading anything other than outright futures, you've probably noticed that it's getting more and more difficult to get accurate, timely margin calculations on your positions. And I'm talking about option spreads, generally with naked legs, or options versus future strategies where you buy a future, sell a call, buy a put, those sorts of things that are a little more complicated than outright futures. Those types of strategies require that a platform or application calculate portfolio margin. And for those using span minimums, which is what we generally use almost always use at our brokerage, span minimums are calculated at the exchange. In other words, these are exchange minimum margin rates. They're based on portfolio margin. The equation is very complicated. The exchange owns all the rights, and they make it very difficult and expensive to access those rights and all the dirty details needed to accurately calculate those things. So as we transition to a new platform based on CQG Desktop, we've found that it's been a little bit challenging to get the margin calculator to work correctly. We're getting really, really close, so that's been a big improvement. But what it lacks is the ability to do what-if scenarios. So for example, if you have a portfolio that has futures and options in the same commodity or related commodities, and you want that to be margin netted, meaning they're not charging full margin for all 3 legs or all 4 legs of your spread. Instead, the risk is netted together and you're charged a margin accordingly. If you're wanting to know what would happen if you peeled one leg off or added a leg, the current version of the trading platform does not offer that, but we now have access to a margin calculator app. It's a web app outside of the platform that you'd be able to log in using your StoneX username and password. I'm going to show you how to use that margin calculator. It's actually very, very accurate and very nice, but it does take a little bit of getting familiar with the terms and terminology and the formatting. So let's give that a go. When you first log into the Armor app with your StoneX credentials, the first thing you're going to see is a menu at the very top. Your menu might look a little bit different because this is the broker version. I think the customer version is slightly different. You might be missing a couple of items, but don't worry about it. I'm not even going to go over those. So we're going to focus on just a few of these menu items. You can click around to anything else you have access to, but to be honest, you're going to find everything you need in what we're going to show you today. So there's a couple ways to get the exact same information, and I'm going to show you each of those ways, and then I'll let you know just in advance. I prefer simply going to the account details tab. In that tab, you'll be able to access anything that you need to know about your account, your margin. You can get directly to a margin calculator where you can add or subtract legs to see how that impacts your margin before you actually place the trade. But for now, let's just take a look at the risk summary. You are not going to see any of this stuff at the top because, again, you are using a customer version. It's only going to show your account. And you can reorganize or add, subtract any of the items from the column headings. So you don't have to just log in and accept what's there for you. If you want to change anything, you can see there's an arrow here in each of the columns. Just click on that arrow and it'll allow you to sort by that column if you want. That's probably not something you're going to be interested in doing, but you can go to columns and choose what you want to see. Probably the challenge with this particular app is knowing what some of these abbreviations mean. I'm going to go over the ones that are going to be important for you. To be honest, you probably don't want to waste your time on anything else. A lot of it is internal stuff that is irrelevant to most of our customers. And you can also filter if you only want to see certain items. But again, if you're only dealing with one account or 2 or 3 accounts, you're probably not going to find any of that useful. So again, to get to the column selection, click on an arrow in any of the columns, and then you can either check or uncheck the columns you want to see. I have them in this particular order. This is a very simple order. To be honest, I don't think this is the page you should be looking at to get your account details, but I'm showing it to you just so you know what you're looking at. I have it in this order because I think it's a natural progression to see the account number, the name on the account. You're only going to have 1, maybe 2 or 3 accounts probably. So you may not even want to see those line items. BOD, NLV, if you click on, I take it back. Don't click, just put your cursor over it. You will see a expanded definition of what that column is. You can see that BOD NLV is beginning net liquidation value or beginning of day net liquidation value. So this is what you started with in the day. And then you can see the profit and loss, which is the mark to market. M to M is mark to market. That's today's profit and loss. So that's not your total profit and loss. That's just how much you're making or losing based on yesterday's net liquidation value to today's. So right now, the account is worth a little less than it was yesterday. P&L percentage, that's pretty obvious. It's the profit and loss percentage. Cash adjustment, this would be if you wired in or wired out, you would see that money in this column here. RIR is current risk initial requirement. That is a very fancy way of saying initial margin. That's your initial margin. So if we look at it, the initial margin in this account is $11,481. The maintenance margin, which is the current risk maintenance requirement, again, maintenance margin, initial margin. I don't know why this business insists on making everything far more complicated than it needs to be. Just remember, I is initial, M is maintenance. So those are your margin requirements. And this is going to show you your margin excess or deficit. Now, keep in mind, this is relative to your maintenance, not your initial. So it's a little deceiving. If you were in a margin call scenario, with which this account is, you would need to bring your account balance above the initial margin, or you would need to bring your margin requirement below your net liquidation value to get within margin. So this is showing an excess of $300, but that's based on the maintenance margin, not the initial. We aren't a big fan of this margin excess deficit figure being based on maintenance margin, not initial, because it doesn't give us truly the information we need. That said, StoneX will be adding a column that will show you the margin excess deficit versus the initial margin, not the maintenance margin. So there will be an improvement, but I wanted to make sure we got this tutorial video out for everybody that's looking to add this to their toolbox. If you are in a margin call, it will show you the amount of the margin call. And now keep in mind, margin calls trigger at the end of a trading session. So this deficit is based on yesterday's closing prices. It'll tell you the call age, which is how many days the margin call has existed. This is day 1 of a margin call. And again, you can drag and resize these columns if you need a little extra room to see everything. If there is an ACH coming in or out, you would see it in this column. If you don't see any of these columns and you want to, again, click on the little arrow, go to columns, and check which ones you want to see or don't want to see. So far, I have shown you everything based on cleared positions only. I would suggest toggling this to current web OE and cleared positions. That's a little confusing. What that means is any trades that have been in the system, not necessarily cleared with the exchange, but this is a quicker, more real-time account. If you're using only cleared, positions only clear a handful of times per day. If you're using preliminary, that's at the end of the day. That's probably not what you're looking for. So current web OE and cleared positions will update the figures based on any positions that you have put on or subtracted today. So again, we're on the risk summary tab, which is the very first one. If you want to see more information, obviously this is pretty basic. You can get most of this in the trading platform itself. Right click on your name or your account number or any column, to be honest. It looks like it works in any column. Right click, show account detail, and it will open up a new window. And from here, you can look at a lot more information regarding your account balance, your beginning value, the current value, and the change. So you can see what the difference is between yesterday's closing prices and what we see intraday. You can click on position details, deficit details, margin requirements. If your account is in good standing, you're not going to see anything on the deficit details. Most of you can skip that. In fact, 99.9% of the time, you're not going to want to bother clicking on that. Margin requirements I'm going to go through these pretty quickly because I'm going to show you perhaps a better, more convenient way to get to this information and a better view. But I just wanted to show you it is here. Margin requirements will split it between the different markets you're trading. Top of day transactions. Top of day just means today's business. Again, commodity industry likes to make things difficult. Top day is confusing. Today's transactions, not confusing. They don't listen to me. Profit and loss. And account info, which you probably already know your address and phone number. And the risk analyzer. This is where things start to get interesting. And I'm going to go through this in detail, and I'm going to show you a different way to get to this screen, which I think is a better way. But you'll just very quickly, I'll just note you can see all of your positions, and you can edit the quantity of your positions so that you can calculate what the margin would be if you took this leg off, if you bought this leg back, if you sold something you're using to hedge, so on and so forth. And you'll also be able to click this button here at the bottom to add positions. If you wanted to see what it would be like if you added a micro E-mini future against your option spreads, you could click add and put that in, and it'll tell you what the margin would be with that addition. I'm going to close this window out, and we're going to go back to the risk summary screen we were on. Now remember, to get to where I was, if you prefer to do it this way, right click and then show account details. So now let me show you what, in my opinion, is the easiest way to go about this. And again, you can click around to any menu items you have at the top and see if you find something that works better for you. But I think if we just go straight to account details and skip everything else, I think this is where you're going to find the most information with the least amount of screen space usage. When you get to account details, you are going to see a strip at the top of the page, very similar to what we saw in risk summary. And again, these columns can be customized. Simply click on the arrow in any of the column and you can bring up the menu to check and uncheck. I've added a few extra line items to this one, but you can make it look or feel any way you want. If you're an option seller, it might make sense for you to have your cash balance, which is the total equity, and your net option value might be of helpful to you as well. So again, you can play with this. If you have any questions about what these things mean, you can put your cursor over the text and it gives you a better explanation. But what I'm going to do is actually minimize this area, and we'll get to more pertinent information or more complete information. I can click on this bar at the top and it closes that top bar. Now, from this page, as I mentioned in the last section when we were talking about risk summary, we had this section, and then to get to the account details, we had to right click and go to show account details. But if you go to account details right off the bat, you don't have to do any of that. You see all of it on one page. I can minimize this bar, and then I can see all of this information without opening a new window or clicking around. It's just there. And if I do want to see this information at the top, I certainly can. And I can see it all on the same page. So it's quite a bit more convenient to just go to account details, save yourself some clicks, and add some convenience. The first tab that you'll see on this page is account details. And I think it's pretty self-explanatory. We can see today's beginning value, the current value, and then the change. And we can see each of these line items. We can see what the margin excess deficit is down here. The most important numbers on this screen in your platform, and literally anything you look at regarding your account or your statement, is the liquidating value. That's the amount of money you have if you liquidated everything in the account and you were filled at the prices that are shown. So if you're looking at a statement, that means last night's settlement price. If you're looking at a trading platform or a live environment like we are here, that means if you can get filled at all the prices that are being used to calculate your P&L, that's what you'll have left in the account. So from the net liquidating value, we can see initial margin requirement. And then at the very bottom, we'll see margin excess deficit. So to clarify, net liquidating value, initial margin, and margin excess deficit are the three numbers we want to focus on. A lot of the stuff at the top really is kind of, I don't want to say inconsequential or irrelevant. It's just misleading. It's a little arbitrary is a good word for it. And that's because if you're an option seller, if you sell an option, it becomes a liability. It's not an asset. But if you're looking at your cash value, it actually adds it to your cash value. So it seems like it's an asset, but it's actually a liability. So I would suggest just focusing on the net liquidation value, the initial margin, the margin deficit. We can see this particular account came into the day with a margin deficit on a margin call. They have since liquidated some positions and are now currently within margin. So again, I'm going to point out that these calculations were for margin excess and deficit are going off maintenance margin, not initial margin. That's, in my opinion, and in most people's opinion, that's not the correct way to do it. StoneX is updating this. So at some point in the very near future, this number will reflect the net liquidating value relative to the initial margin requirement, not the maintenance. And a few things of note on this screen. If you are on a margin call, you'll see that right here at the top. Also, there's a little refresh button down here. So if we click the refresh button, it'll reload with updated stats. Next, we can toggle to the positions detail. Positions detail is going to show you, obviously, your positions in detail. And you can see that each and every separate option or future is laid out for you. You can see your quantity here, how many buys and sells you've done during today's session. That's top of day or today's sessions. And your net holding, average price, real P&L. That means realized P&L. NOV is net option value. Again, you can hover over the column title to see exactly what you're looking at. Open trade equity, daily P&L. You can see how much you're making or losing on the day, not total, on the day for each position here. And if you were holding multiple contracts with different fill prices and dates, you could click on these arrows here to expand. You can see on this position, there was originally coming into the day a 4 lot. They've since been bought back. But because of that, because there are multiple contracts, you can click on that and see in detail your trade price for each of them. If it was a position that you only had a 1 lot for, you could still click on the arrow to drop it down, but you're not going to see very much more information that you already saw without expanding. Like the other pages in this app, you can click on these arrows in the column and go to columns and choose what you want to see. So again, it can be customized. If you wanted to export this information via an Excel spreadsheet, you could do that here. On this page, the refresh button's on the lower right-hand corner. So if you've had this open for a minute and you think there might be some changes in price, you can click the refresh button and that'll update everything. Next, we'll click on deficit details. This is a wasted tab for most of you. I would just skip right over it. But if you were on a margin call, this is where you could see the details there. We can click on margin requirements, and this is going to show you per product. You can see crude oil, equity indices, gold, all separated. And you can see the maintenance margin, the initial margin. Remember, risk is a word for margin, which is silly, but that's how this app and how many other platforms work. So risk initial margin, that's your initial margin. That's the most important number. That's what you really need to have your account balance at or above. Now I'm going to throw in something a little more confusing. There are two different types of margin calculations and two ways to view them. There's a net margin and a gross margin. We generally prefer to use the net margin, which are these risk numbers, risk initial, risk maintenance. These are the numbers we use, and we pair those against the net liquidation value of the account. However, some brokerages, some platforms, some apps, they use the gross margin amount, and the gross margin amount is calculated a little differently in that it adds cash collected on short options to the margin requirement. But those figures are then matched against not the net liquidation value, but the account equity or the account cash balance. Remember earlier in this tutorial, I mentioned if you sell an option, it immediately gets added to your cash balance. However, it's not an asset, it's a liability, so it's misleading in my opinion. If you were the type of trader that focuses on account balance and a cash balance, you might want to use these numbers. Again, I think that's just overcomplicating something that could be quite simple. So focus on risk maintenance, risk initial. Those are the net margin figures. They can be posted against your net liquidation value for comparison. There are a few columns on this screen that I would suggest generally bypassing. They are for internal risk management purposes. I mean, you as a trader need to manage your own risk, obviously, but I've found in this business, KISS, keep it simple, stupid, is the only way to go. And if we start complicating things with some of these stress figures, I don't think it's going to help us. I think it's going to create more confusion. Top of day transactions is, as I mentioned, today's transactions. Top day means today. It's pretty simple. I think the most important page that we're going to look at in this app is the risk analyzer. So everything up until now has been just kind of informational purposes to help you get a bearing on where things are. A lot of that information you can find right within the trading platform. This will be more accurate. So if you think something looks weird in the trading platform, you can always come over here, check the margin, and I think you'll find it's a little easier to digest and makes a little more sense, especially because you can see the margin is broken down into each market sector. So if you're trading crude and equities, you'll see exactly what the margin is for those positions. So we've clicked on the Risk Analyzer tab, and as a refresher, we are in Account Details. We have minimized this bar. Don't have to minimize that bar, but it just cleans up the screen a little bit. And then we've clicked on the Risk Analyzer tab. This is going to show all of the open positions that you have in your account. You can see I've toggled this to current. You could go back to start of the day, and that would load obviously the start of the day positions and your margin requirements. You can see your beginning of day net liquidation value, your net lick, your margin requirements, and excess deficit up here. If I go to current, that's going to show what it looks like now after any of today's market movements, price changes in any of the positions that have been added or offset. If we wanted to go further, in this case, you can see we are still a little short on margin. So if we wanted to figure out what would we need to do to reduce our margin enough to get off of margin call, we could take a look at the positions and say, okay, we are short a couple of call options in crude oil, and maybe buying one of those back might do the trick. So if I click on edit, toggle to 0, and update, we can see that that reduced our margin a little bit, but not enough. Let's say, what will happen if I buy back another one of my oil micro options? What's that going to do to our margin? And you can see it barely budged. The micro options and futures they're micro. That's why they're called micro. So they're not going to give you a lot of bang for your buck, especially if they're decently out of the money. So I'm going to go back to current positions. If I click on start a day and then go back to current, it's going to refresh everything. So all the changes that I made will be erased and we're back to what's actually in the account. So we can see there's E-mini S&P, I take it back, micro S&P. Options, we have some short calls, we have some short puts. We may get a little more bang for our buck offsetting one or two of these. Let's try to offset one of the puts and see what that does. And that, just buying back that single S&P put did the trick. We now have a margin excess. You can see your initial risk is 994.24. Your net liquidation value is 10,071. So we're in good shape. And I can scroll down to the bottom and see those the updates that I made up here by buying back that put. Obviously, just make sure everybody understands, when I edit this column here, I edit our quantity. We were short one. I subtracted it and made that quantity 0, meaning we're flat. But this was not a trade. This is just a margin calculator. This is just telling us what would happen if we adjusted our positions in this way, and how would that impact our margin. So obviously we're not actually exiting these positions. This isn't a trading platform. It's just a margin calculator. But we can come down and see now that the margin calculations on our equity positions, the E-mini S&P, have changed according to what we have done up here in our hypothetical margin calculator. We could also do something like, what would it do if we added a short micro future? We can click on add in the lower left-hand corner, select the exchange, which is going to be CME Group. This is something that I don't love about this, but I'll give you a tip. Most of the products you're going to trade are going to be CME. Those are the stock indices. COMEX. Those are the metals. NYMEX, New York Mercantile Exchange, or Chicago Board of Trade, which is up here. So unfortunately, it's going to require you know the 4 CME exchanges. So we're trying to determine if we added a long or short micro futures contract against our options, if that would add or subtract margin. So I've checked Chicago Mercantile Exchange on my drop-down menu because stock indices are traded at the Chicago Merc. And I'm going to choose future. And the drop-down menu doesn't look like there's an area to type in the symbol, but if you know the symbol, you can type it in. And this is going to be a little bit of a learning curve as well. Select the period is the contract month. Now, unfortunately, it doesn't give us letters or spell it out. We have to kind of understand 2026-06 is June, 2026-09 is September. I'm going to choose September and one contract, and I'm going to add that. So that adds it to our margin calculator. Obviously, this is not executing a trade. It's just adding this position right here to our margin calculator. And we can scroll up and see, oops, that added margin. So we don't want to do that. Maybe if we sell the future, that'll help us out a little more in margin. And it does. So we sold a future in our margin calculator, our hypothetical margin calculator, and we can see it reduced the margin pretty well. And that makes sense because this account is short more S&P puts than they are calls. So they were technically net long the market. By selling a futures, they get a little less net long. And we can come back and take a look at the equity, total equity margin. It's reduced dramatically. So we'll do another example. This account is short a crude oil call, the strike price of 100. To be honest, that's not very consequential. Crude oil at this point, I think, is trading around 77, 76. Someone might, and I'm not saying this is a good idea, but somebody might think that it's a good idea to sell a micro crude oil future against a long call option. So let's see what that would look like. Again, we're looking for the NYMEX, New York Mercantile Exchange, and it's a future, and we're looking for a micro crude oil. I'm going to choose July. 7th is July. And we're going to go short and update that. So after adding a short micro crude oil futures to our margin calculator, we can see we're now back in a margin deficit scenario. So a good idea might be to purchase a call option that's closer to the money that offers a little more protection to that position. If you sell a future and buy a call, your risk is limited to the difference between the futures entry and the call strike price plus what you pay for the call. So by doing this, we reduce margin and we create a limited risk scenario. Technically, this account is long a 100 call, so the risk is limited to 100, but that's a long way away. We're currently trading in the mid to high 70s. So let's go ahead and add a call option somewhere in the 80s. We can leave the exchange the same. I'm going to go to an option from a future, and I'll point out, this is the big crude oil, not the micro. We'll scroll to find the micro, but you're going to see that there are weekly options. This is a week 1. This is a week 2. This is a week 3, Thursday expiration. So this is a week 1, Wednesday expiration, WL1. This means a week 2, week 2, Wednesday expiration expires on the second Wednesday of the month. Let's go find the micros. You're going to see something very similar. Okay, so here are micro crude oil options, weeklies, same scenario, micro, weeklies. Micros only have, well, I'm not going to even say that because the exchange adds expirations on products all the time, so scratch that. We're going to keep it simple though. We're going to use a monthly option, which would be this. So this is a traditional monthly option for micro crude oil. I'll click on it. We're going to choose August because that's what our futures contract is. We're hypothetically short an August future. And we're going to select C for call. And we're going to see what buying an 80 call would do to our margin. So you have a positive 1, that means we're buying. If it was a negative 1, that would mean selling 1, correct? Buying 1, selling 1. Okay. So if I add that long call option, it turns our micro futures into a limited risk play, and it lowered our margin requirement quite a bit. Not enough to get us off of margin deficit, but it gives us a pretty good shot. So this is how the margin calculator would work if you were wanting to just simply adjust your position to get it within margin or get it under control. Now, you may be in a scenario where you don't want to consider your existing positions. You just want to know what the margin requirement is to put on a fresh trade, a new trade unrelated to anything you have in your account. To do that, we would go to the risk analyzer outright without having your account selected. I'll show you how to do that. So if you want to use a margin calculator, a what if calculator prior to entering the orders, the easiest way to do it is go to risk analyzer at the top, choose to create, spec account, margined at 100%, and then choose create. And that'll allow you to start from a fresh slate as opposed to your current positions uploading into the system and calculating based on adding or subtracting to your current position. So if you want to start with 0 positions to see what's the margin if I sell this call option, or what's the margin if I buy this future and then sell this call option and then also buy a put against it. So this is where you would do that if you don't want to incorporate your current positions. So again, you'd go to Risk Analyzer, on the top menu tab. You have to create a new spec account. Click Create, choose the account type spec, margin percentage 100, create. Once we have it created, we can add positions by the same method that we used in the other margin calculator or the other version of the margin calculator that has your positions. So we click on this and choose an exchange. I'm going to say Let's do something on the board of trade. Product type, future. Let's see what it costs to buy a corn futures and then also buy a put against it. This is actually a trade that we recommended to our clients. So let's see what the margin currently is. I'm going to leave the quantity at +1 because I'm buying a December corn future. And you can see once I put that on, the initial risk is $1,100. That's the initial margin. You can see that down here as well. Let's add a put option. Now, it might take you a little while to just get used to the formatting. Again, 2026-12 is December. And we're going to buy a 440 put, which is right at the money. And we are buying this put. So it's a quantity of +1. And I click Add Update. And we can see the initial risk is, or initial margin, I should say. Initial margin is 777. As someone from Vegas, that's a little concerning, or maybe that's maybe that's a good sign. I'm not quite sure. But the margin is $777 to go long a corn future and then buy a put against it. Let's see what the margin would look like if we sold a call in addition to buying a put. So we can keep all of the same inputs because we're dealing with the same product. I'm just going to switch this to call. And we're going to sell a $5 call against it. Now, the quantity would be -1 because we are selling 1. I'm going to click Add Update, and our margin goes down to 422. So it cut our margin in half. And that makes sense because we're long a futures contract. This is the money maker. And the other positions are hedges. We sold the call, used the money that we collected on that to buy a put, and this is what the margin would look like. If we wanted to see what it looked like to be long the future with a short call, but without the protection of the put, I don't recommend doing this, but let's say that we wanted to do that. We could just change the quantity to 0 and watch the margin requirement go back up. And we'll add it back because that didn't seem like a very good idea. As a reminder, this is a separate pop-up window. If you're dealing with the risk analyzer that's built into the system, such as in the account details page, risk analyzer, it's going to upload all of your positions. So if you don't want that, again, use the risk analyzer at the top menu. It opens up a separate window. And then from there, it is going to populate your account details, but you can simply click Create, Spec Account, Margin Percentage 100. Now, theoretically, you could put the margin percentages at anything you want, but we charge span minimum margin, so it's 100%. You're not going to get any better than that. The exchange wouldn't allow us to do better than that, and we wouldn't want to anyway. That's an amazing, it's a substantial amount of risk. So we'll just leave it at that. If you were dealing with some other brokerages, they often charge 200, 300% span, but that's not the case here. So we leave it at 100% span. We hit Create. We have a new spec account, and we can simply start adding positions. So for summary, you really probably don't want to do anything beyond risk summary, account details, and risk analyzer, with the exception of deliveries. If you click on deliveries, it's going to show you any positions that you have open that are expiring or going into first notice day. Now you're going to want to switch this toggle here to all products. Some of you might be trading some cash settled products. Those are becoming more and more popular or common. I would toggle this to all products so that you can see everything. And you can change this. This is the number of days before first notice day. If you want to alert yourself 15 days in advance, you can type a 15 in there. And it's going to show you all the products that are going to be expiring or going into first notice day in the next 15 days. And this is pretty awesome. So most platforms will tell you the last trading date, or the expiration date, but they don't tell you first notice date, which is the most important thing. Most brokerages require their clients to get out expiring futures prior to first notice date. So if you see that July corn has a first notice day of June 29th, that doesn't necessarily mean you want to plan on holding all the way to the 29th. You probably should be out of that a couple of days, 2, 3, 4 days before that. In this case, the 29th lands on a Monday. You probably want to be out by the 25th, which is a Thursday at the latest. We've seen in commodities over and over and over again, when we start getting into first notice day, liquidity thins up and sometimes the market does weird things. It's just a good idea to roll well in advance or exit rather than waiting for the last minute, because a lot of times you get price squeezes and they generally, for whatever reason, tend to be unfavorable. On the screen, you can also see net long and short. So again, this is the deliveries tab in the upper menu, and it's very, very helpful. Some of you might actually want to know what's happening in the next 30 days, and that way you have plenty of advance notice. Again, the trading platform that most of you are using is CQG Desktop, which is, you're at least using a version of CQG Desktop. It might be StoneX Futures, might be DeCarley Trader, which is coming out soon. In that platform, it shows you an expiration date. It does now show like a delivery window, but it's a little bit confusing. This will give you a concrete date of when you should be out of products. I recommend using this. So if you do happen to log in to test your margin, click on the deliveries just to make sure you're not missing anything. If you are watching this video, you are probably an option trader, so this is going to be important to you. If you click to the option tab, it's going to show you options that are expiring in the time interval chosen. So I'm going to choose 15, and this is going to show us options that are open. So I chose the time period of 15 days in advance. So this is going to show us options that are expiring in the next 2 weeks roughly. And we can scroll down and see what's happening here. Now, this is an extensive option expiration list. This is only going to show you the futures and options, expirations, and first notice days of positions you're holding in your account. So it's not going to show you all, it's not like a calendar to be used that way, but it will show you or tell you which options and which futures have a shelf life and what that date is that you're going to need to be out of or expect the consequences of not being out. So that concludes the tutorial of the Armor margin calculator. Again, this is a great tool to just get an overview of your account, your positions. You can view the margin charge on each individual position or each individual market sector. For example, energies, metals, that sort of thing, it'll net them. But the most important thing is you understand how to use the risk analyzer, which is the margin calculator that we went through. That will allow you to determine what the margin will be on a trade that you haven't even placed yet, or what the margin will be if you adjust an existing trade. If you have any questions, reach out to us, info@DeCarleyTrading.com. As a reminder, we are a boutique brokerage shop, futures and options. If you're watching this video and you're not a client of ours, you probably should be, because whoever your broker is, whether it's an IB or someone directly working for the FCM, if you're watching our video to learn how to use one of the tools available to you, your broker's probably not doing his job. So if you have any questions for us, or if there's anything we can do for you, here's how you can reach us. DeCarleyTrading.com. If you're interested in market commentary, but you don't want to switch brokers, we do also offer us a Substack, DeCarleyTrading.substack.com. If you're interested in subscribing but not opening an account with us, we do offer trading newsletters with market commentary, trading ideas, so on and so forth. And we hope to hear from you soon.